So, at the last conference organised by Colm McCarthy, I used a ventriloquist. He's still in the hall, so Brendan spoke my paper for a complicated reason. But here I am in person this time, and I want to tell you that was at the beginning of January. January the 12th, I think it was. At that stage, I don't think I made any forecast in that particular paper. At that stage, I thought that this is actually all going to end up with the government owning the banks. And that's still, I think, quite a likely scenario. But actually, quite a lot has happened since that. The first thing that happened is that the government did take ownership of one bank. Another thing that I felt at that time was that there were going to be a lot of developments internationally as other countries faced their own banking problems and came up with their own solutions, and that there would be some kind of convergence of views as to how to deal with this sort of thing in an advanced economy. And indeed, there have been a huge number of policy initiatives, or a number of huge policy initiatives, probably more important. And these have all also happened over the last now, I know you don't want to see any more hares, or even the piggy bank that I gave the last time, but I do have something else. These are camels, and anybody who has anything to do with reading textbooks on bank regulation know why camels are in the picture, because that's the mnemonic used officially. The bank has to have a certain camels rating to be allowed to operate in the US, and camels aren't going to move on. So I just use it as a framework for just quickly running through the sorts of things, the things that have happened are the things that we've learned about in the banking system. CAMEL stands for Capital, Assets Management, Earnings, Liquidity. There's also an S, but we can go with that. So let me start with management. Okay, this is going to be a problem. Well, management, let's not dwell on it. Of course, there's the big mistake, and that is, the one big mistake, and we all made it to a greater or lesser extent, but of course the banks were being paid to make it, and that was the big mistake about the property boom. We also have heard about window dressing directors' loans. We've heard about back-to-back deposits designed to flatter the ability of a bank to attract non-bank deposits. We've heard about loans for share schemes. We've heard about egregious pension payments. You will notice that Anglo-Irish and Irish Nationwide have been involved in each one of the high-profile events here. But we can also remember times past, and prime time last week brought us through some old stories about ICI, Rosneft, or Tax, Falador, Nevis. So there is a bit of history here, okay? So the management situation, both the new stuff and some of the stuff that we remember from the past, not really very good, bringing us, I think, back down to the sort of grubby standards that we know, or anybody who's been following banking over the years knows happens in a lot of places. And we're at that level, probably no worse than the average. I don't know whether that's how one can measure that. And we have had changes. All of the guarantee firms have replaced some top executives and are their chairs. They haven't maybe looked very far for replacements. The next one is earnings. So let me stress the importance that's being attached now to earnings. Before loan losses, the earnings that banks have been making and will continue to make, or are expected to make over the next couple of years. Great emphasis is being placed on this, both here and abroad, as a way out of the problem, a way of filling the hole. For example, in the US stress tests that were announced a few weeks ago, there's a shortfall of $535 billion or something like that. They came up with $535 billion of loan losses not yet accounted for. And of that, they expect $363 billion to be made up through other earnings of the banks over the next couple of years. So they're saying, just hang in there, we'll nearly make it. And so they are requiring some banks to find additional capital, but most of it they're going to make up with earnings. And this is the flow approach to bank resolution. Hang in there, banks are profitable entities, they make some losses, but if you just hold tight, they'll come out of it again. Problem, it's proven to be a costly and it's never recommended, except when it happens to your country, then you say, well, let's not do anything drastic, let's just hang in. Here, we have that sort of projection as well. The stress tests that have been done for the Irish banks are to do with what's going to happen over the next 2 years. Will the bank reach the threshold of capital by the end of the period? They're not saying, let's take a stock of your whole portfolio and let's see what's here. They're just saying, over the next couple of years. Situation on earnings, there are wider spreads. I can't give you a number exactly on wider spreads that are being charged here on new business, but I can show you these interesting, or update these interesting charts on credit supply and demand, if you like, from the European Central Bank survey, the Irish part of it. For enterprises on the left-hand side, households on the right-hand side. Down means less demand in the red and tighter supply in the black. And you can see that after the shock of late 2007, both supply and demand fell, and they're still falling, because as long as they're underneath, they're below that line at 3 there, they are still falling. So there's still tighter loan conditions, and that is resulting in wider spread. So any new business the banks are doing, we're told they're making lots of money on it. So it's an interesting fact on earnings. So I've done management and earnings, liquidity. Okay, so 3 facts here. We have 2 new data points. Well, we have 4 new if we did it monthly, but I had a chart there previously that was quarterly. So here it is again. We have 2 new data points in the quarterly chart. I showed this position of Irish credit institutions, net foreign position, several years ago, and it continued to go up. I think I can press this to show a laser. Anyway, it continued to go on up until 2008, but now we have a complete collapse. So the Irish banking system basically is no longer very heavily reliant on foreign borrowing. Let me add to that all credit institutions, and let me add another next picture. We can separate out the mortgage lenders. It's very hard to get the banks you really want in the central bank data. The mortgage lenders, the fall hasn't been so severe. There are two important banks that are not in mortgage lenders but are in all credit institutions. One is Anglo-Irish Bank and the other one is Debt Fund. So when we see this sort of dramatic, well, what's happening is the wholesale financing is not being moved. There's some small fall in deposits, but it's the wholesale financing is not being moved. So what are the banks doing? They're not squeezing credit, not much anyway, in terms of volumes, but they are borrowing from the central bank. There's the figure for borrowing at the end of March. I don't know what's happened since end of March, but total borrowing of Irish banks, all credit institutions in the state, from the central bank is 130 billion euros, which is a lot of money. That's quite an important point. Assets, so capital, assets, management, earnings, and liquidity. So the growth has stopped. Let me show you those, update those charts that I had in January for each of the major banks. And you can see on the right hand, what do you call it, the bars. The bars actually show you the growth rate, real growth rate. And it's not that the data is missing on the right hand side, it's that they're at 0 or negative. Okay? So that's all of the latest number. We doesn't have the Bank of Ireland latest number because that will be 2009. But that's actually negative. And then for the other, the 2 smaller, that's the 2 smaller institutions that are covered. Now I want to say something about, this is very provocative. I have no particular view on the Bank of Ireland's accounts, but I had to laugh when I was driving home from Mayo yesterday and I heard that they had lost a very large sum of money. It said they'd lost 7 million euros. And I thought, aha, I said, that 7 million, that's zero. And I recognize that.